People is talking about the new Asta Spintex IPO, but is this 170 crore issue a brilliant textile growth story or a retail investors quietly walking into a trap to fund a massive bailout for related promoters? We are doing a complete no nonsense Asta Spintex IPO review. We'll cover the basic dates, the price band and the grey market premium, but most importantly, I am going to reveal a hidden 130% valuation premium in their acquisition plan that your standard brokerage app probably isn't showing you. Stick around because the real truth about this company is hiding deep inside their cash flow statements. On the surface, the Asta Spintex financials look fantastic. They are vertically integrated cotton yarn manufacturer based in Gujarat, and here is their absolute superpower. According to their draft red hearing prospectus, they power about 80% of their operations using their own captive solar and wind energy. In the energy heavy textile business, that is huge. It pushed their operating EBITDA margins up to a very healthy 13.2% in fiscal 2025. You hear that and think, wow, I need to buy this. So let's look at the basic Asta Spintex IPO details. The issue opens on June 29th and closes on July 1st. The Asta Spintex IPO price band is set between 125 and 136 per share. Retail investors need to apply for a minimum lot size of 110 shares, meaning you will need 14960 to get in. It is a 100% fresh issue, which usually means the money goes straight into growing the business rather than exiting founders cashing out. But how they plan to use that fresh capital is exactly where this story takes a very dark turn. Before we get to a shocking math behind their acquisition target, we need to look at a massive and red flag in their day to day operations. You see, while their profit after tax looks great on paper, growing to nearly 23 crore in 2025, the reality of their bank account is totally different. According to recent analysis of India Rating and Research, Asta Spintex actually generated negative operating cash flow of over negative 18 crore in fiscal 2025. They are a profitable company bleeding cash. Why? Because their buyers aren't paying them on time, pushing their debtors days all the way to 92 days. To survive this, they have maxed out their bank credit limits to over 96%. Furthermore, according to their filings, a single trading partner named 7 Seas Impacts accounts for almost 34% of their total revenue. If that one reseller walks away, a third of their business vanishes overnight. Let's talk about the elephant in the room, the Falcon Yarn acquisition. Out of 170 crore being raised from the public, over 111 crore is being used to buy Falcon Yarns Private Limited. Here is the catch. Asta Spintex is paying rupees 33.33 per share for Falcon. But as reported by CareEdge Ratings, Falcon Yarns just did a share buyback in September 2024 at only 14.46 per share. That means public IPO money is paying a staggering 130.5% premium for a company whose profits have actually been dropping. And the ultimate plot twist, both companies share overlapping promoter networks. Let that sink in for a second. Is this true strategic expansion or promoter arbitrage? This brings us to a valuation. At the upper price band, the post PE ratio for Asta Spintex inflates to 25.65 times. Let's compare that to a competition. A well established peer like Ambika Cotton Mills trades at a much lower PE of just 14.25 times, while Lagnum Spintex trades near 11 times. You are being asked to pay a top tier premium valuation for a company with negative cash flow, dangerous customer concentration, and a highly questionable acquisition strategy. Also, the GMP is hovering around 0 to 4 rupees looking for a muted listing. So, will you be applying for the Asta Spintex IPO allotment? For conservative investors, the risk here seems to far outweigh the rewards. I would love to hear your thoughts. Drop a comment below if you think the Falcon Yarn deal is a red flag or just normal business consolidation. Don't forget to smash the like button, subscribe for more deep dive IPO analysis, and click the video on the screen right now to see the latest review of the upcoming IPOs. See you in the next video.